Holy smokers, this ain't no jokers. We have so much to get into in this video here today, ladies and gentlemen. It's earnings season. We have insanity going on in the financial markets right now. And oh boy, are you ready for what's coming, okay? So looking at Bitcoin right off the bat here, Bitcoin's now down a 50 spot. It's down 50% from all-time highs. It hit just a few months ago. Ethereum's now down over 70% from all-time highs. It hit just a few months ago. We're looking at a stock like Robinhood, right? Back to the hood, I call it now at this point in time. All these brokerages are obviously getting hit immensely. People are thinking, okay, if the market continues to trend down here, first off, you're going to have way less assets under management, right? Because everybody's portfolios are going down, especially if you hold Bitcoin, Ethereum. Those are two things that obviously somebody like Hood's made a lot of money on over time. There's also a thought process of less trading activity, less new customers because everybody's so like disenfranchised with like, you know, the way the markets are and those sorts of things, right? And so investors just continue to sell the stock off relentlessly day after day right now. Hood's now down 52% from all-time highs. It hit just back in October. Look at Coinbase. We call it coins, looking for coins in the parking lot. Coinbase down 62% from all-time highs. It hit back in October. And even the world's greatest asset is going down all the way to Chinatown. Look at silver. This is silver just in the past few trading days, down almost 40%. Unbelievable. A friend of mine made a big prediction going into 2026, and he said that the TLT will outperform the QQQ. That's a big prediction. And as of right now, he's actually looking really good as far as that prediction. We'll see how it ages as the year goes along. But as of right now, he's looking really darn well with that. This is IGV. This is a software ETF. And this is probably the worst I've ever seen this particular ETF since I got in the market 17 plus years ago, right? Look at this baby. It's down over 23% in the past month. That's an unbelievable move. I had to go back to kind of the Rona crash because I was like, gosh, the Rona crash was so insane. Was it worse? And what I found here is on a month basis, back in the Rona crash, it fell 20%. So this is literally worse on a month drop than the Rona crash for IGV. This is incredible, right? Absolutely incredible. Look at a stock like SoFi. It's broken $20. It's lost 30% of its value just in the past month and is down another 3% after hours at this point in time. Woo! Palantir's an ouchie. Look at Palantir from those all-time highs it hit a few months ago. This one's now down over 37%, right? I remember in 2025, I said, you know, this stock is going to be stuck for a long time in the 125 to 200-ish range, right? And just kind of fluctuate there. Well, Palantir 129, I mean, we're getting close to that 125. So if this stock goes down to 110, 100, something like that, I will actually be in shock because I would not have expected the stock to go down to those sorts of levels, right? I kind of figured, well, if people are feeling real bearish, they'll kind of push the stock down to like 125. But man, with how much momentum is just downward in the stock and the relentless selling pressure day after day in Palantir, it makes you think, like, could this even break under what I thought, right? And go down to 110 or $100 or something like that, right? Look at Micro Tragedy. Oh gosh, this is impressive. MSTR. This baby's now down 76%. Unbelievable move down. And by the way, it's down another 3.5% after hours right now. Micro Tragedy is ugly. Michael Saylor posted this on his X. If you ever want to follow me on X, by the way, it's always linked in the description area down there. Looks like 5 million people have gotten to see it so far. Hodl, he says hold. Yeah. We'll see, right? It's just brutal out there right now, especially in regards to Bitcoin, Ethereum, right? But a lot of other assets as well. Okay, in this video here today, 5 core subjects we're getting into, okay? First off, ELF and EL, both those cosmetics companies crash. What's my opinion, perspective? Is there an opportunity, not opportunity? We'll talk about that. Number 2, the SaaSpocalypse, they're calling it, right? The SaaS stocks just getting wrecked. Where's the bottom at for these stocks? I'll tell you where I believe the bottom is for these SaaS-related stocks, okay? Third thing we'll get into today, a position I sold out of today, why I did it. We'll cover that. Fourth thing, Amazon earnings obviously came out. Amazon stock's down big. We'll talk about my perspective as somebody that's a big Amazon shareholder and all that good stuff, okay? And number 5 thing we'll get into today is I did buy tens of thousands of dollars worth of stocks today. I'll tell you exactly what stocks I bought and why I bought those stocks here today. Busy action-packed times. I hope you appreciate me trying to cover all this for you guys. One thing only I need from you. If you could just smash that little like button. If you haven't already done so, please do so. And for everybody that's already done it, Thank you for that. Okay, I appreciate you. Additionally, you want to make sure notifications on for this channel and make sure you're subscribed. That way you can get notified as soon as I drop a video, because guess what? With how crazy things are, you never know when I could drop. I could drop a 2 a.m. video on you. You never know with how insane things are right now, right? It's nuts time. Also, I want to draw your guys' attention. This video I put out about a week and a half ago, roughly. Age 36, net worth 40 mil. Every single investment I own, you might want to watch that video. Goes into every single stock, alternative asset, real estate properties, all that good stuff. 49-minute video, 101,000 people have gotten to see it so far. So if you haven't got to check it out, you might want to check it out when this video is over here today. Okay, already got a lot to get through. ELF and EL crash right off the bat. Listen, these were my two worst stocks today. EL stock down 19.19%. ELF down 9%. That's a shocking move in regards to ELF, because after hours, I remember seeing ELF after hours yesterday up 15%. So it's up 15% after hours, and what do we have to show for it? 9% down here today, right? You can't do, it doesn't matter really what you report, it seems like. It's just you're going down at Chinatown, right? And as they say, you can't put lipstick on a pig, and guess what? You can't put lipstick on this pig of a market right now. Ugly, right? Ugly. Now, in regards to ELF, this was a grade A quarter. Net sales up 38%. Gross profit up 37% for the company. Operating income up 93%. Net income up 128%. Diluted EPS up 116% for the company. Extremely strong numbers out of ELF Beauty overall. But, I mean, at this, it doesn't matter. Net sales could have been up 48%. Like, they would have found a reason to sell the stock off, right? It's just the market you're in right now. And, when you're in a market where just everything's selling off, it's kind of like you almost have no choice. I mean, look at Google. Google's a good example. I mean, gosh, that one tried so hard to eke a gain, but gosh. EL, as far as Estee Lauder stock goes, this one's really positive. Every single category is growing for them. Skincare was up, makeup was up, fragrance was up, hair care was up, other category was up. Total revenues up 6% for the company on a year-over-year basis. That's a good number for EL. Best number in quite some time, right? And then as far as operating income or loss, they went to $454 million of operating income in the skincare segment from 306. Their makeup category lost them $211 million in the same quarter last year. Now that's to profit $18 million of operating income. Fragrance was $105 million operating income versus a $446 million loss in the same quarter last year. Hair care, $18 million operating income versus $3 million loss in the same quarter last year. And other, $13 million in operating income there versus $45 million loss. So look at the operating income loss. I mean, we're talking about $1 billion swing here, ladies and gentlemen, on a 3-month basis, right? On a year-over-year basis. That's incredible. $608 million of operating income versus a $399 million loss. That's insane. Insane. So bravo, EL. They pulled it off. Like, if you remember me betting on the stock, obviously, over the last year or two, it was on them having a big turnaround. And guess what? The big turnaround has happened. America's region grew for the company year over year. The EU business grew as well. Asia Pacific grew. And look at China business grew 13% year over year. Very strong growth. And then obviously operating income very positive in every single market. I mean, just couldn't be happier. As far as the income statement overall, B plus grade. If you look, net sales was up 6%, while cost of sales was only up 4%. So that doesn't mean great things for gross profit. And sure enough, 6% growth year over year. Gross margin 76.5% from 76.1%. If you look at SG&A, that went up only 2% year over year, much less than revenue. That's what we want to see. Restructuring other charges still hit. That was up 14%. That should start to kind of fade away as this year goes along. So do keep in mind, this whole big, multi-$100 million hit is going to start to roll off as the year ticks on, in my opinion. And what that's going to mean is profitability skyrocketing as the year ticks on, okay? No other impairment of goodwill like they had that hit last year of $861 million. So as far as total operating expenses, that actually decreased 22% year over year. Operating expense as a margin, operating expense margin 67% versus over 90% in the same quarter last year. Operating income $401 million. That's a huge improvement year over year, almost $1 billion swing there, right? And as far as net earnings, $162 million versus $590 million loss in the same quarter last year. 44 cents diluted EPS versus 164 negative. B plus income statement for Estee Lauder. Look at where they were at this time last year. They were at an F grade. F grade income statement. Ugly times ugly, right? What a dumpster fire into a huge, beautiful turnaround, right? So everything I predicted with Estee Lauder has now happened at this point in time. It's great to see, right? Oh, actually, that was actually back in 2023. This one was this time last year. They reported an F plus at this time last year. What an unbelievable change, right? So here's the thing in regards to me personally with ELF and Estee Lauder. Both have been very good stocks for me in the public account and my other portfolios as well. ELF, I'm up, almost 1,000%, even after today's massive drop and the drop in general in regards to ELF, right, in the public account. And then Estee Lauder, I'm up $48,000, up 39% in that one. I love these two stocks. You know, the bottom line is I would love to own a lot more shares of both these stocks, right? The issue we have in the market right now, and I'm sure a lot of you guys are feeling this right now, is there's too many deals out there. You know, sometimes you're in the market and it's just like you're looking and you're like, gosh, it's so hard to find a deal anywhere, right? This is not that sort of market. We're in a market now where it's just like deals everywhere. It's like, oh, you want a 50% discount on this stock? Here you go. You want a 60% discount on this stock? Here you go. 40% discount, 70% discount, right? And if the market keeps going down, the discounts just get even bigger. Gosh, that's the issue. That's the one issue you have when you're in this sort of market. There's deals everywhere. I want more Estee Lauder stock. I want more ELF stock. But there's a lot of other opportunities in the market I see. So it's like, what's going to give me the better risk reward? Do I want to get over invested in this category versus that category? Tough situation. But the moral of the story is both those stocks are buys today, okay? The thing is, though, those were generational buying opportunities last year, right? Like, EL stock got down to, what, $50 or so? ELF stock got down to, like, $50 or so. I think ELF went into the 40s. I think it was, like, 49 at the lows or whatever. That was a generational buying opportunity. I'm seeing generational buying opportunities in some other stocks right now, and we'll talk about some of those in this video. These are great buys right now. ELF at $76 is a great buy. EL at $96 is a great buy if you have a longer term investment horizon. But I've got generational buying opportunities out there right now, right? SaaSpocalypse, where's the bottom at for the stocks? Okay, then we'll get into a position I sold, Amazon, and stocks I bought today. So the SaaSpocalypse is ugly. Looking at CRM stock, Salesforce, down almost 50% from the December 2024 highs in the stock. Almost cut in half. And that's for the big dog, right? Do keep in mind with Salesforce, if IGV eventually starts to bounce back, Salesforce could be one of the biggest beneficiaries because it's one of the biggest SaaS-related stocks, and it's one of the ones that fund managers would feel most comfortable in. So just do keep in mind when SaaS starts to move up again, which maybe it never does. They're all just going to zero, right? When it does start to move again, Salesforce will be one of the biggest beneficiaries right from the jump. So do keep that in mind, right? Now, this is pretty shocking. I pulled up Salesforce right prior to Rona, right? So right prior to like everything going crazy and all of a sudden you heard about cruise ships were being stopped and Rona was coming to America and all this stuff, right? So I pulled up CRM right prior to that insanity. And CRM is the same price today as prior to Rona. That's crazy. Crazy. Because look at what has happened to the company's revenues over that time, right? If you look back at, coming off that year in 2019, they had $13 billion of revenue. They did, last year they did about $38 billion of revenue, right? So they nearly 3x'd their revenue over this time period, and you got a 0%, last action hero stock return, right? The price you pay is extremely important. Let me show you the net income of Salesforce over this time. Salesforce net income in 2019, they did $1.1 billion, right? In this latest fiscal year, they did 6.19, so nearly a 6x in net income. And yet you have nothing to show for it regarding the stock price. The price you pay is extremely important in this game. Do not let anyone ever tell you it doesn't matter, just buy it, it's got great growth. Baloney. The only people saying that are people that don't know how to run valuations, and they're likely saying it during a peak euphoric bull market. And that's the only time they say that. In any other logical time, you realize the price you pay is extremely important. You could have bought Palantir at $6. You could have bought Palantir at $206. The price you pay is extremely important. You can say, well, no, it doesn't matter. Like the company's just growing very fast, so it doesn't matter what price you pay. Yes, it does. You could have bought Salesforce, back prior to Rona, and you got a 0% return. Well, everything's gone up massively in price since then, right? Or you could buy it today for the same price with a way better company, a way stronger company, way more revenues, profits, all that good stuff, right? The price you pay is extremely important. You got to know how to run projections on stocks. You got to know what's a fair price to pay. I teach you all of that in my private stock group. We have 1000X in the projections. We have that there for a reason. I run projections several times a week on tons of different stocks to try to see how big of an opportunity is this or not. You don't know how to run your projections, you're going to find yourself in a world of hurt in this game. You'll find yourself in a Salesforce stock that you didn't make any returns on. I believe Salesforce is going to be a great winner chicken dinner over the next several years. You know why? Because I ran my projections. I ran modest projections, and it says Salesforce is going to be a huge moneymaker for me. I ran projections on Salesforce years ago, and you know what it said? Not much money to be made there. And you know what happened? Not much money to be made there, as in pretty much nothing, right? This is why price you pay is important. Do not let anyone ever tell you it's as simple as just buying the stock that the revenue is going up. That only works when you're in a raging bull market. And then there's a huge price to pay when you're not. When you're in a kangaroo market, doesn't work. When you're in a bear market, doesn't work, okay? Price you pay is important. And that could be the difference between you making a 300% return on a stock, a 500% return on a stock, 1,000% return on a stock, a 2,000% return on a stock versus, being in a stock for years and years and years. And you look back and you're like, dude, I didn't make anything in this, didn't make anything in this, didn't make anything. There's a big difference, okay? Big difference, right? ServiceNow. ServiceNow might be the most quality of all of them. It's debatable if Salesforce or ServiceNow is. But Salesforce, look at this baby. This baby's now down 56% from highs it hit last year in 2025. And good luck taking them out. Like if you have ServiceNow integrated in a large company, good luck taking them out. Good luck, right? Absolutely brutal. I don't think the people selling off these stocks or even thinking about how could you replace this, right? Go try. Every large company, go try to take out ServiceNow. Good luck, man. Good luck, But it's what's going on right now. The fear is winning, right? Adobe has been cut in half plus some, right? From its all-time highs, it reached back in 2024, down 51% now at this point in time, right? Look at Intuit. Suddenly QuickBooks, TurboTax, Credit Karma, MailChimp, they're all irrelevant overnight, essentially, right? Look at Intuit, it's down nearly 50%, 50 at this point in time, right? So these stocks are just it's SaaS apocalypse. It's a good way of putting it, right? So are we close to a bottom, right? In regards to these stocks? Well, in order to understand if you're close to a bottom, don't look at technical indicators or anything like that, right? Because, oh gosh, it's all just, mumbo jumbo. Look at valuations. And you got to say, okay, have things gotten stupid? How much more stupid could they get, right? So if I look at Adobe's forward P is 11, Salesforce forward P is 14, ServiceNow's forward P is 24, right? ServiceNow's a double-digit grower and should be a double-digit grower all the way for years to go in the future. CRM's a high single-digit grower and should be for years to go in the future, maybe low double digits. And Adobe's a high single-digit grower and should be for years to go in the future, right? So these valuations are, for lack of a better word, stupid. How much more stupid could they get? A little bit, but not much more, right? I think we're close to a bottom in regards to all these stocks. Could Adobe go down to a 6 forward P? All things are possible, not realistic. So if you're thinking, could Adobe get cut in half again from here, right? And go down to a 5.5 PE, forward P? Likely not happening, right? Could it go down another 10% from here? That's fair. That's possible. Salesforce. Could Salesforce get cut in half from here, go down to a 7 forward P? No. No. As dumb as the market is, it's not that dumb, okay? ServiceNow. Could ServiceNow get cut in half again, go down to a 12 forward P with strong double-digit growth for years to go in the future? No. So the moral of the story is these sorts of stocks are close to a bottom. They might not be at an exact bottom today or next week or next month, but they're close to a bottom. When I say close to a bottom, I'm talking likely within 5 to 15% of a bottom. It could be at a bottom literally right now, but I would say within 5 to 15%. So if you're thinking, is there another 30%, 50% downside for these stocks? High probability of no. Okay. That's what I'll say in regards to that. Okay. You look at some of these valuations on these stocks, it's so laughable now, right? Adobe's at a forward P 11, Salesforce at a forward P of under 15. Look at something like a Walmart. Walmart's at a forward P of 44. So we're talking about a 4x what Adobe's at. And we're talking about 3x where Salesforce is at, right? Now you might say, wow, Salesforce and Adobe might get disrupted, right? You can say the same thing about Walmart. Walmart might get disrupted. Amazon could just start selling every single thing that Walmart sells for a cheaper price and have it delivered to your house. You never have to drive to the store. You never have to get out of the car. You never have to get asked for change in the parking lot. Nothing, right? They can just do that. Amazon's got plenty of money. They just announced they're going to do $200 billion of CapEx. Lord knows, Amazon's got plenty of money. They could just eliminate Walmart. Why don't they just do it, right? We can all play these silly games of just like, oh, this company can just eliminate this company, and this company can just, they're irrelevant because of this. Like, we can all play that silly game. It's just ridiculous, right? And so the moral of the story is the market goes through these sorts of time periods when it's just fear, fear, fear. And that's what we're in right now, right? Next up here, I was talk about a position I sold. Then we'll get into Amazon. Then we'll get into stocks I bought today. Okay. So position I sold, it is a leveraged hedge against Tesla stock. Okay. TSLZ. Now I sold this one in a private portfolio. I still have my hedge on in the public account for right now. Okay. But I made a great gain on this one, low 5-figure profit. Right under $11,000 in profit, made 34% pretty quick in that one, right? And so I decided to take the profit this morning and move that money elsewhere, and we'll obviously talk about those sorts of stocks, but I was kind of looking at it, I'm like, there's $42,000 just sitting there, and can the whole market go down more than it has? Sure, that's possible, right? But you got to understand, for me to really get Tesla hammered, I need the Qs to go down 10% plus. If you start getting a 10% plus drawdown on the Qs, we could start seeing a lot of damage in regards to Tesla, right? And because look at, this is the Qs just over the past 7 trading days. Qs are down 6%, Tesla's down 9.2%, right? And like I tell you guys, basically Tesla's almost like a call option on the NASDAQ itself, right? If the NASDAQ's going up, usually Tesla goes up way more than the NASDAQ. If the NASDAQ's going down, usually Tesla goes down way more than NASDAQ. And this is exactly what we've seen over the past 7 trading days. Now, I'm also 2x leverage, so a 9% move there could be like an 18% move in that ETF, if not more, right? And so can we get the market down a lot more? That's the question, right? Well, if we look at kind of the weighting here, and keep in mind, I'm showing you S&P 500 weighting. I could have showed you Q's weighting. It would be a little bit more extreme. I'm having doubts that the market can go down significantly more than where we're down right now, right? And when I say significantly more, I'm talking about going from like a 6% down on the Qs to like 16%, right? Or 26%. I'm having a lot of doubts, and here's why. I'm sure everybody's seen the insane CapEx numbers from Google McDougal, from Amazon, from Meta, all these companies, right? The numbers are ridiculous. So NVIDIA is the biggest market cap out there, the biggest weight out there. It's really difficult to get NVIDIA down a lot more from here, right? I mean, could you get NVIDIA down 20, 30% from here? It's possible, but gosh, good luck. Good luck. Because guess who's the biggest beneficiary of all these ridiculous CapEx numbers? The biggest beneficiary by a mile is NVIDIA. We all know that, right? And so NVIDIA's already been hit. It's at 171. Could you get it down a lot more? You could get down a little bit more, but I just have doubts about getting NVIDIA down another 20% from here, right? Apple. Can you get Apple to get hammered here? It's tough because Apple's seen as a safe haven right now. They're the ones not spending a ton in AI. So they're kind of seen as like the golden child right now, right? Everybody's getting beat down. Meta, Google, Amazon, all these companies are getting beat down because of Microsoft, because they're spending so much on CapEx, right? Apple's the one that's not. So Apple's in this time period where the market's kind of getting upset, investors getting upset with these companies spending so much. Apple's the golden child. They're the ones that are not spending the fortunes, right? And also, to be quite honest with you guys, Apple has the best numbers I've seen in years. Years. Like, you have to go back all the way to like 2021 to see Apple reporting this impressive of numbers as far as growth rates go. So you got a company reporting great numbers. You've got a company here that's actually returning massive amounts of money to shareholders through dividends and buybacks rather than spending on CapEx. And people are kind of looking at Apple as the safe haven right now, right? Now, it's debatable if Apple's actually a safe haven for the next 5-10 years, right? But for right now, they're like the golden child. So to get people to massively sell out of Apple, difficult. And so that's why I'm having my doubts about, the whole market's going to crash. Because you got to get people to sell out of NVIDIA and Apple en masse. And I'm just saying those are tough propositions. And so that's why I took my profit on that Tesla hedge here today. I'm holding the one in the public count for now. I have 2 hedges on in the market, right? One is I still got the TSLZ in the public count. I don't think I have it in any other portfolios. I think I only had it in that private portfolio and then in the public count, right? And then the other hedge I have is cash. I have a lot of cash, right? And so those are my 2 hedges on in the market. If the market continues to downtrend more, the next hedge to go will be the TSLZ. I'll probably end up selling it early. Tesla stock will probably go down way more, just as Duolingo did and Chipotle did, right? Which were my 2 previous hedges. And I sold those way too soon, took my profit way too soon, and I missed out the huge money. But I get nervous regarding hedges. So a lot of times I'll make, 20, 30, 40%, 50% on a hedge and I'm out, right? And then I look back and I'm like, dude, I could have made so much more. Like my Duolingo hedge, I made like 50% quick in that. Took my profit and ran. I missed out on, I believe it's around $250,000 of extra profit now. And that was a hedge back in the summer of 25. Another $250,000. Last time I checked, I could go buy another Ferrari with $250,000. It happens. So if you see me take the rest of my money on the Tesla hedge, don't be surprised if after that, Tesla stock really crashes. That's how it works, man. That's how it works, I swear. I don't get nervous holding long positions. I'll hold long positions for years and years. But those hedges, I get nervous, man. And you give me a fatty profit quick, I'm out. Next one up here, Amazon. Then we'll get a stocks I bought here today. So this was posted inside the private stock group. I like this one. Nick posted this one. SoFi, AMD, next up Amazon. The Grim Reapers come for them, right? Pin comment down there. Join my private stock group. A lot of the private stock group, serious stuff. All my course curriculums, 1000xstocks.com, right? Keeping up to date. But sometimes this stuff means so much. Like just being able to laugh about something, right? It's you might only get it if you're in there in regards to like how much some of this stuff means, but it's like nice to be around a community of like-minded investors who are in these stocks also, right? And because a lot of times in the stock market, it just feels like it's so lonely, right? It feels like you're out on this boat and there's like no one out there and you're just by yourself. And it's great to have this group of individuals that are invested in Amazon, AMD, and all these other companies, and we get to keep each other up with the news and all this stuff and make jokes, and it's fun, right? Alrighty, so Amazon down 10% after hours. That was after it was down 4.4% here today. It makes you think, how much would that stock have been down if it wasn't down today, right? Makes you think, right? I posted this inside the private stock group also. Cross-eyed Jeremy, I saw that CapEx number, $200 billion. Like, you gotta be flipping my flapjacks right on the floor. Oh my gosh. $200 billion. That was like $55 billion over what the street was at. I mean, the number's just shocking. That basically takes all of likely Amazon's projected operating cash flow for the year, right gone. It's an insane number, man. Absolutely insane number. No, as far as AWS, Amazon Web Services, that number came in and beat, which was great. We love to see another acceleration in regards to AWS growth rate. 35.5 billion they did. The Wall Street was a little under 35 billion. So that was the ultimate. That was a great thing, right? But there was 2 things people were keeping an eye on. One was AWS growth. They want to see another acceleration. We did that. Great. But they also want to see the CapEx. And the CapEx number was so ridiculous that the insanity canceled out the AWS beat. And that's why you see the stock down 10% after hours, man. Just tough. Now, in regards to the quarter overall, is a grade A quarter. Net product sales went to 89 billion from 82 billion. That's 9% growth. Net service sales up 17%. Isn't that crazy? Remember back in the day when everybody just thought of Amazon as like an e-commerce company, right? And now, like, look at the service sales. This is, is things like AWS. This is things like their advertising business. Like, that's where the big growth is, and that's where the much bigger number is now at this point in time. 17% growth there, 123 billion from 105 billion. Total net sales up 14% year over year for the company, which is really good number, right? Cost of sales went up 11%. So I don't love seeing that, especially given not net product sales was up only 9%, but it's not the end of the world number, right? Fulfillment was up 10%. I don't like that because that's a higher percentage than net product sales. Technology and development, that got hit hard. That's a 25% number up year over year. My guess is a lot of the infrastructure spend is starting to hit that line item, right? Sales and marketing was up only 9% year over year, so I'll take that when your revenue is up 14%. G&A, actually, they brought that down 6%. So G&A, here's the issue, man. Amazon keeps firing employees, and they just fired a bunch more. I just heard about this days ago, right? That's not even a big line item. So it's like, okay, they brought that down 6%. Look at how small it is. G&A is not the issue with Amazon in regards to spend. It's things like this right here. Technology and infrastructure. That's the issue. That's up to almost a $30 billion line item. I mean, we're talking about $10 billion a quarter. And that's going to explode a lot higher. So Amazon can fire corporate employees and you're just saving little money, basically. Go fire a few thousand corporate employees. It's little money. It's literally little money, and it's almost meaningless now for Amazon. So if you see Amazon go fire 5,000 corporate employees, just understand it's not like that's going to be some big savings and it's like, oh, our profitability is going to skyrocket. No, it's just not the way it works anymore, okay? Now, as far as other operating expense, that was a huge number, $1.2 billion. Sometimes that's more of a one-off. That was a 614% increase. Total operating expenses up 13% for the company year over year. I mean, it's not a great number, but it's not a bad number because total net sales was up more. And the total net sales number is much bigger than the expense item, which means your operating income is going to be in a great place. So operating income went up 18% for the company year over year to almost 25 billion from 21 billion. Interest income went down 9% for the company year over year. My guess is treasuries yielding lower. Interest expense also went up. And my guess is debt going higher, right? So interest expense was up 19% year over year for the company. Now, they also had a big kind of more one-off type thing as far as operating income here. It was a 151% increase, almost 1.2 billion from 468 mil. So total non-operating income was up 42% for the company year over year to 1.6 bill. So, these kind of like one-off categories here kind of cancel each other out for the most part. They got screwed by income taxes, provision for income taxes. That was over a double up year over year. That was a 112% increase. So their net income only went up 6%. Diluted EPS was only up 5% here. But keep in mind, it's because they got screwed by income taxes. If it wasn't for that income taxes, net income and diluted EPS would have been up at a faster clip than likely revenue. Okay, so just something to keep in mind there. Now, here's the deal, okay? I got to be honest with you guys. I have question marks. Amazon says they're going to spend $200 billion on CapEx this year. I have question marks about if and when they'll get that $200 billion back. Because keep in mind, they've got to then make $200 billion of profit. We're not talking revenue. They got to make $200 billion of profit to make that make sense. And obviously, you got to make a lot more than that, right? And plus, they spent 100-something billion last year in 2025. Who knows what they spend next year? Maybe it's $250 billion. They got to get all this money back in profit. Not in revenue, in profit over the coming years to make it all make sense, right? However, I kind of got to give Amazon the benefit of the doubt because they spent huge on e-commerce and they spent huge on Amazon Web Services. And guess what? Like, that was genius. Like, they got all that money back. And there was a lot of question marks back in the day in regards to all their spend on e-commerce and all their spend on AWS, right? But I feel like those were clear propositions. I think it wasn't hard to wrap your head around, like, everybody and their grandma is going to be ordering a lot more stuff online as the years tick on, right? So I feel like you could wrap your head around that. AWS, that was harder than e-commerce for people to wrap their heads around at first, right? And I remember, shortly after I got in the market, kind of around 2010, 2011, and this is, keep in mind, I get in the market like end of '08, really start diving in '09, start figuring out my strategy, watching a ton of Warren Buffett clips on YouTube back in those days, right? And then by the time I get to kind of like 2011, I'm like full in the stock market now at this point in time, right? Like it's a huge component of my life. I'm watching CNBC all the time. I'm getting annual reports delivered. My wife can tell you back in those days when she first came over, I used to have like basically a whole bookshelf of just loaded with like annual reports, like physical annual reports from back then, right? And I remember, I'd have CNBC on, and I remember they would be talking a lot about cloud. And even myself, I'm like, what is this cloud thing they keep talking about? They're talking about cloud, right? It was definitely harder to wrap your head around it, but you started kind of understand, okay, like all these businesses are going to the cloud, right? They're going to want to be able to access everything from everywhere. And so a company like Amazon can benefit. So you could start kind of wrapping your head around this. This AI thing, right? Like we see it being used, but we're like, how big is this opportunity really? Because the numbers are so insane in terms of the spend. They make the spend for the cloud and for e-commerce look like not that crazy. Like Amazon never had to spend $200 billion in a year on CapEx. That was never a thing. Like the numbers they used to spend when they were building their cloud business, and it was like questionable back in 2010, 2011, 2012, 2013. Look at those numbers. They're literally a joke compared to the numbers they're spending now, right? Look at what they had to spend on their e-commerce infrastructure as they built that up over the years. Literally, it was like nothing compared to these numbers they're spending now. And so we're looking and we're like, oh my gosh, they're spending these ridiculous numbers. Are they even going to be able to make great profits from this? It's not like we can't see a future where people are using Gemini and people are using, ChatGPT and people are using Anthropic's products. Like we understand that, right? And we can see how people will use these products more often for more things, right? And we can see how these companies will make money from this. But it's the spend is so ridiculous. We're having trouble wrapping our heads around, like, how do these companies get all this money back? Because this isn't the only year they're spending. They spent a fortune the previous year. They spent a fortune the previous year. They're going to spend another fortune 2027, right? At some point in time, you got to ask yourself, like, how are we going to get the ROI on this? Like, this is just insane, right? And so we got to give Amazon the benefit of the doubt, but this is a hard one to wrap our heads around, right? It really, really is. The one thing I'll say about all this insane spend, because we've had basically all the big tech companies report as far as the big hyperscalers, as they call them, right? The moral of the story is you got to own AMD. You got to own it. Like I have $1 million plus in AMD and I feel like it might not be enough. Like the public count alone is about a $500,000 position, and I own just AMD shares coming down my ears and other portfolios. I'm going to be honest with you, I might not be enough. When you see the money that Google is spending, Amazon is spending, Meta is spending, and the thing with these sorts of companies is it's not like they don't have the money to spend on it. That's the thing. I understand with OpenAI, like crap, they got to raise a lot of money, and there's fears around that, and are they going to be able to raise? There's like questions. These other companies actually got it, right? So you gotta own it. You gotta own AMD. Like there's no other way around it, right? You just gotta own AMD. It's a must own. And I've walked away from this earnings season feeling better than ever about AMD, right? Alrighty, next up here, stocks I bought today. So I posted this in my private stock group this morning. Obviously the Tesla move I made there in the breadcrumbs tab, and then the stocks I bought. And so what did I buy? Well, I bought 85 shares of Adobe. I bought 120 shares of ServiceNow. I bought CRM, 60 shares of CRM, right? And we're in a generational buying opportunity in 2026. And when I say generational buying opportunity, I'm not talking about for the whole stock market. Nope. I'm talking about for SaaS stocks. This is a generational buying opportunity for SaaS stocks in 2026. I think we'll look back at this year in 2026, not for every single stock, not like every single SaaS stock is going up massively over the next few years. But I think we're going to look back 3 years from now, 5 years from now, and look and be like, remember in 2026 when every single SaaS stock was selling off 50, 60, 70, 80%? That was silly, right? And we'll be like, look at these stock prices now. And so you go through time periods when there's generational buying opportunities. They're just in different places. Last year, I was speaking about Estee Lauder and Elf stock. Those were generational buying opportunities in those sorts of cosmetics companies with all the tariff drama and all that stuff that was going on, right? If we go back to 2022, generational buying opportunity in companies like Shopify, it was $25. Stocks like Meta, it went down to 88. Stocks like Netflix, that stock was like a fraction of the price it is today. That's even with the recent crash in regards to Netflix stock, because that one's been hammered, right? I could take you through a whole long list. Like Nvidia's gone up like 1,000% since those lows it reached. There was a generational buying opportunity. Heck, AMD went down to $55. Even after this crash, AMD's just under 200. So that was a generational buying opportunity in certain stocks, right? In this year, I see a generational buying opportunity in regards to SaaS stocks specifically, right? And I think we'll look back a few years from now and be like, dang, 2026 was truly a generational buying opportunity for SaaS stocks specifically. Not for necessarily the whole entire stock market, not for every single financial asset, for SaaS stocks specifically. And so I like to participate in these generational buying opportunities. And maybe I'm wrong. Maybe all these SaaS stocks just continue to go down for not only this year, but next year, the year after. Maybe Adobe and Intuit and all these stocks are just dead money forever, right? Or they're all going to zero. I don't think that's the case. I think the market's being very delusional here. And I think I'll be right. But we'll see. I believe it's a generational buying opportunity year for SaaS stocks. And so I will be buying these stocks almost pretty much the whole year. Like, just understand, you're likely not going to see me done buying these stocks in February. I'll likely be buying them more in March, in April, in May, in June, in July, in August, in September, and October. Like, I'll likely buy them all the way through the year end. Because even when these stocks bottom, let's say hypothetically they bottom this month or next month, right? You think I'm going to stop buying them when they start going up? No, because there's still going to be a steal deal. So I won't be done buying them. I'll continue to add to my position, right? Will I buy these stocks in 2027? Probably not. I'll probably have my positions fully built. I'm trying to add as aggressively as possible in the first quarter, as I've mentioned previously, right? But I wouldn't mind adding these the whole year. And by the end of this year, I'll likely be done buying SaaS stocks. I'll likely take an advantage, and then we'll see if my hypothesis is correct here. I believe it will be, right? But time will tell, right? Public count, $3.5 million here today. Took a huge hit, right? Let me ask you a question. Does it matter to Jeremy Lefebvre whether this portfolio says 3.5 mil, 2.5 mil, or $4.5 million today? The answer is absolutely not. Other than my ego, do I really need my ego any bigger than it already is? Come on, man. What's it matter? I'm not selling out of the public count. This year, next year, the year after, it's irrelevant. If that portfolio today says 2.5 mil or 3.5 mil or 4.5 mil, what does it matter, right? Obviously, over the long term, I want it to increase massively, but I'm not selling the public count right now. I'm not like, I got to go use that money to go buy, a fleet of Ferraris or this or that. None of that. And so when I look and when I see the public count at $3.5 million today, I also think about when it was $2.5 million during the tariff drama last year. I also think about when the public count was around $1 million going into 2023 after it got slapped, right? I also think about the days when the public count was, $10,000 back in 2018. And I also think about the days when the public count was just a little portfolio getting absolutely slammed at the end of 2018. And so, when it comes to your portfolio, you're adding these stocks and investing for years to go in the future, right? It's not like I'm like, I gotta, pull out the money tomorrow. I'm gonna go buy a bunch of TVs. What are we talking about here, right? Like, focus on the long term, and that's how you get to a place where, you start having so much money that, it kind of becomes irrelevant. And that should be the goal, right? We're trying to make so much dang money that all becomes irrelevant over time, okay? So, that covers that. Okay. I appreciate y'all for joining me. Once again, you might want to check out this video right here. Age 36, net worth 40 mil, every single investment I own. That one came out about a week and a half ago. 101,000 people have gotten to see it so far. So if you haven't got to watch it, make sure you check that one out. Additionally, pin comment down there if you're looking to apply to join private stock group, private wealth group, with all access to all that stuff, all the course curriculums, access to the private Discord chat, access to exclusive weekly videos, access to see the moves I'm making in my portfolios, all that good stuff. We'll send you your Steel membership cards once you join us in there. That will be pinned comment. Much love and have a great day.